Let's talk markets then. S&P 500, guys, most names for every name that's down. Roughly, you've got 4 names to the upside. So definitely a lot more of a broader upside trade today.
All right, I'm looking at Bitcoin because, yes, we did see a fresh record yesterday. The equity markets may have been closed due to the holiday. But ahead of Trump's inauguration, we saw Bitcoin hit 109,000 per Bitcoin. Now it's trading at just around 106,000.
It definitely feels like an everything rally, except for the dollar, which kind of stalled out. But you look at small caps in particular, 10 out of 11 groups are higher. That's kind of the same breakdown for the big caps. The only group that is lagging behind is energy right now.
Yeah, but taking a look at small caps, we're 8 points away from breaking that 50-day moving average. If we see some follow-through buying tomorrow, can we finally get that sort of sustained upside and a new level higher for small caps?
The broader market getting some big help today from NVIDIA, Amazon, Oracle, some of the big heavyweights, so the percentage gainers definitely in that energy space, material space, as well as some of the industrial names as well. We are awaiting earnings out of a few companies, including Capital One, including Netflix, as well as United Airlines, as we get the closing bells in New York. Up 0.9% on the S&P 500 as Netflix, Carol, crosses the wire.
It does indeed. Netflix, let's go first of all to net paid streaming users in the fourth quarter, 18.91 million. That is a massive beat versus the estimate of 9.18 million. Also, the company getting into the outlook, it sees 2025 revenue, 43.5 billion to 44.5 billion. It had seen 43 to 44 billion. And you do see Netflix shares up about 5.5%, 7% here now in the aftermarket.
I'm looking at shares of United Airlines down about 1% in the after hours as we speak. Fourth quarter adjusted earnings per share did beat estimates, coming in at $3.26. Estimates were for $3.05. Fourth quarter operating revenue coming in at above estimates at $14.7 billion. Fourth quarter available seat miles also coming in above estimates at 78.3 billion. Fourth quarter revenue passenger miles exceeding expectations. Also shares right now just lower by about 0.7%.
I want to go back to Netflix for a bit because of that massive beat on the net paid streaming users in the fourth quarter, double what analysts had anticipated. In addition, revenue, $10.42 billion. That's the outlook for the first quarter, which is a bit shy of what analysts had anticipated, which is $10.48 billion. Nevertheless, you're seeing the stock really jump at the moment, up almost 8%. And Netflix has authorized an additional $15 billion in stock buybacks as well.
Yeah, I mean, it's really hard to find something super negative about this. Remember, this is the last quarter where we're going to be getting those subscription numbers. So it's sort of how do you then benchmark how well Netflix is doing in that revenue number? That'll do it for you on that high end, over $44.5 billion.
But why would you stop reporting your streaming ads if you're going to beat by double?
All right.
Good question. It's a good question.
You guys should take a closer look here at the investor letter here. The company does talk a lot about sort of the metrics that they will be using going forward, but more importantly, this idea of monetization and some of the efforts that they're making to do that. Also saying that they do plan to make a better, their words, push into games. They actually talk about some of the success they had with Squid Game Unleashed and how that could sort of be a template here for some of the other things. And of course, they talk a lot about live events here and the push there. So a company that is becoming a lot more layered in its offerings here, and at least based on what they're saying, they think that is going to be the future of this company. Interactive Brokers earnings are also out at the moment here. And sorry, I'm having a little trouble pulling it up. Here we go. Interactive Brokers is coming out right now. Those shares higher by about 1% here in the after hours trade after EPS did come in just a little bit higher than street estimates. Average customer margin loans also coming in above estimates. Customer accounts also coming in line at about 3.34 million. Net interest income at 807 million. Those shares up 1.2%, Carol.
All right, so let's also get to Massimo. It is, let me just pull it up here. Sorry, we're bouncing around here, guys. Actually, they've got a new CEO, and so forgive me, I actually don't have it up on my terminal. So they are announcing a new CEO at the company, so something that we're watching here also in the after hours.
All right, let's go take a look again, maybe at United. I just want to take a look at their guidance here, guys. The first quarter, if you're looking at an earnings beat, they're looking at 75 cents to $1.25 a share. That is a huge beat from what the expectations were. I was taking a look at that first quarter, doing quite well. Remember, Delta really set the bar quite high for United Airlines, and they delivered that fourth quarter profit well ahead of expectations.
I also, too, when we talk about this idea of consumer spending, the health of the economy, we were talking with Katrina Dudley just heading into the close. She was very optimistic, and a lot of that was this idea here that at least in the U.S. here, we continue to fire on all cylinders. GDP is up, consumer spending is up, and corporate fundamentals seem to be supportive of equity valuations, in her words.
Hey, I want to go back to Netflix because this is a blowout quarter, guys. Shares continuing to soar higher after the company reported net subscribers that was more than double what analysts thought they would. And I think it's this mix of programming, at least that's what the company is coming out and saying. I'm old enough to remember, I was talking about this earlier, old enough to remember when Netflix would never do anything live. Netflix would never do sports. Netflix would never do, like, a weekly talk show or something like that. Netflix wasn't even doing comedy specials a few years ago. This company is turning into essentially offering every mix of programming, and it looks like customers are paying for it. They're okay with it. I mean, I was telling Carol, I've never seen a boxing match in my life, but yes, I tuned into the Tyson-Paul match.
And you waited a long time to actually see that main event, too.
It wasn't starting, so I watched it the next day. I stayed off of social media and I watched it the next day.
And it's not just sports, too. I mean, we talk about the live comedy events that they've been doing. I know they had the one with Chris Rock and John Mulaney and a few others, and of course that roast of Tom Brady. So this is not just sort of one thing. They really are experimenting with a lot. I guess the question is more, at least for me, making sure that the costs are under control and developing some of those projects.
And one way they can keep costs under control is to not bid for live sports. They do make the point that they're not focusing on acquiring rights to large regular season sports packages that does not include potentially things like playoff games or games on Christmas Day.
And this gets to the point, too, and probably to Tim's point, too, is this does this kind of create the stickiness, if you will? Because we talk so much about the churn. Netflix, people will sign up for it just to see whatever binge watch the show, and then they leave. And now they have these various ad tiers, which are designed to keep people sticky.
Yeah.
And you have all these layered events here, which maybe you just kind of pay it and forget it.
Yeah, I do think, look, if you don't want to pay $20 a month for the ad-free version of Netflix, then maybe you say, okay, well, I'll go to that lower tier, the ad-supported tier. I can live with that because they're giving me a little bit of something that I want to watch at least every month.
All right, guys, I just want to get in here. Capital One, that company also reporting as well. So in terms of earnings, it was a beat coming in $3.09 a share. Total deposits also coming in quite strong, $362.71 billion. Net interest margin, though, was a little bit light compared to estimates, coming in just above 7%. The net revenue coming in also a little bit light. They did talk about their fourth quarter having steady top-line growth in their domestic car business. They also talk about a return to loan growth in their auto business and stable credit card business. Carol.
Listen, I want to go back to Netflix, right? Because this is a big one, and we're seeing it move big time. Our Lucas Shaw weighing in and talking about this live programming and how vital it is to Netflix as it builds out its advertising business. So we're not going to get the subscriber numbers, right, going forward, but advertising is the way forward. And what's interesting, it says the company shows advertising during football and wrestling to all of its members, not just those on the less expensive advertising supported tier. He also says that in their 12 major markets, the majority of new customers opt for advertising in the 12 markets where it is available. So it just shows that people are, opting into that model, and that looks like that's the way forward when you look at where, kind of revenue growth is going to be going forward. So just kind of interesting stuff. All right, Netflix up about 10% here in the aftermarket. All right, guys, that's a wrap. Across platform, radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. Closing bell. We'll see you again, same time, same place tomorrow.